Hi, this is Mark from Orange Rocket. Welcome back again. I just wanted to talk to you a little bit today about profitability and revenue and all of those kind of things, because I just get really fed up of a lot of the people talking in terms of our industry, in terms of revenue. It's all this 6, 7, 8 figure brands, and I think it's wrong. We need to mature. We need to start talking about other aspects of our business other than just turnover. It sends the wrong message. And so, just looking at some example data here, we can see that obviously number of units sold, orders received, average sale price, all of that kind of stuff, and then the revenue. So, we would probably be whatever this brand is. This would be a 6-figure brand. I don't think this is hasn't got all of the data in it, but this would be a 6-figure brand if we were talking in terms of the usual way people talk about it, which is wrong. But you start looking at these, you think, wow, I've done $42,000 in January. Well, look at these costs that come off of it. In terms of advertising, in terms of cost of goods, that's the cost of manufacturing it. You've got refunds to factor in. You've got fixed fulfillment if you are largely FBA. You've got variable selling fees, which obviously is the 15% in most cases. You've got discounts to consider. Come down here, you've got advertising, branding, and sponsored products. You've got storage fees. You've got subscriptions for your monthly account. You've got fees to send in your products to FBA using your courier. And then we come down to the profitability. So we've got, in this example data, from the 42,000 revenue, we've made 7,600 profit, or 18%. Now, it's still quite a healthy profit. And I just happened to pick one of the highest months by accident. But, we've got sales at 12,000 and we've got a 9% profit. So, whilst the figures are still quite healthy for, making a living and all that, don't be under the impression that it's all about revenue. And that I find very frustrating as a business owner, when we have these conversations around revenue, because of the 360,000 revenue, we got to keep 50,000 of it. And so whilst that's again still quite a nice healthy number, it's still nowhere near this figure. And we've got to consider there that if we're ordering stock from say China, or even from suppliers where they take a long while, then you might need to pay for your stock in advance. Obviously you've got off Amazon costs. This tool we use is our own tool called Profitizer that we use to track profitability. You've got accountancy costs, bookkeeping costs. You've maybe got staff costs. You've got all sorts of insurance costs and things which obviously aren't on the Amazon platform. They're things that you pay for: compliance and regulation fees, tax, all of that kind of stuff. You've got inventory to pay for in advance. So that fee, so it starts becoming about cash flow and not about just about profitability. So understand the numbers of your business. Understand the main core aspects, particularly of Amazon, which has some unique elements such as fulfillment fees and things like that. Remember that the revenue that goes into Amazon and what gets paid to you is net of all of their costs. It's important to remember that, and it's important to understand the proper metrics. And for us as a business and as a sector, e-commerce, we need to mature and we need to start talking about the proper KPIs to manage your business. Thank you ever so much for listening. I hope to speak to you again soon. Take care. Bye-bye.